Okay. In trading, you can not decide that the market should give you any amount of money. Okay. You cannot decide. You can say that, okay, this is my profit. You can decide to hit or not hit. You can say this is your stop loss. You can hit or not hit. The thing beyond your control, profit, all those things are beyond your control. What is within your control is how much you are willing to lose. Okay. But not just how much you are willing to lose. So, how much am I willing to lose? How much? First of all, how much are you willing to lose? Okay. How much are you willing to lose is what is within your control. If you don't define this before you start trading, before you start your journey, then you will not make it. Why? Because if how much you are willing to lose is not defined, then it means that you are willing to lose everything. Okay. Okay. So if this is not defined, if not defined, then you are willing to lose everything. Okay. So if this is not defined before you take any decision, if this is not defined, then it means that your account balance is your stop loss. Okay. So the most important thing in life, okay, this was taught by Sam. Okay, Sam taught me. All right. The most important thing in life is time. Time. Okay. So first of all, time is the most important thing. Time. Time is the most important thing. Okay. Why? Because time is something you cannot get back once it is gone. Okay. So if we say 11 o'clock, okay, we have a session and you don't join at 11 o'clock to follow, you're lucky that maybe there will be a video. But that 11 o'clock that you were not able to join the session, what did you use it for? Is it going to bring you money? Is it going to bring anything? So this is the most important thing. Even in the forex, okay, you have price, you have time, but the most important thing is not the price, it is the time. That is why, okay, there are particular time on the chart where the market will be volatile. Okay, let me show you. Um, hold on, I'm looking for a particular. I remember. Means I need to log in with my other account. Kills on. Okay, something. I'll go. No, um, not, not this. Hold on, I'm coming. Let me look for this session. Something indicator to explain you the time to you. Okay, so sessions. Session. This one. Not this one. Or in person. Session. Those ones. So when if you know these sessions, okay, you know that there are times. Let me see if I can create ICT goes on. Anyway, wanted to use the indicator. All right, let me log out of this. Log in with sign in. Okay, so I'm supposed to do this one quickly. Quickly. Goes on. Okay, so this is the one. This is the one out. Okay. Sorry. All right. So I was talking about time. Okay. So I was talking about time. So in this market, price is not as important as time. Okay. So it is price and time that is working. Price and time that is working. Now, I want you guys to be looking at something. Okay. Look at the intersection, okay, of the London and the New York. London, New York, or Tokyo and North London. Okay. So for instance, here, London and New York, this level. Okay. Right. And this level. Right. So you see that the market came back to, okay, this aging fail, right? Drop down into this aging. What time? What time? Okay. The time is around 3 here on this particular one. Okay. So maybe change my time to GMT. GMT, which is West London, Lagos +1, Lagos +1, London is still +1. We are on 0. Okay, so I'll choose this, which is 0. And I'm hoping that this time will change. This is the time, it's 12:32 now, 12:32. Okay, time now, 12:32. Okay, so the market, okay, moves at certain time, right? There are those big moves are happening within certain uh, time of the day. Okay, so let's assume that the day is closing this 3 a.m., 1 a.m., somewhere here. Okay, so see where price is reacting from. So this is 16, not supposed to be 16. Okay, so this is what 4 a.m. Okay, so the time has changed. Okay, so this is supposed to be 0. Let me let me set it. See if I'll be able to set it because still not affecting it. Anyway, so what I'm trying to say is that time is the most important thing. Okay. So when time is lost, you're not going to get it back. Okay. So what your definition of what you want to lose has to have a time factor to it. So you can say that I'm willing to lose, willing, 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 willing to lose percentage over time. Okay. Percentage over time. Okay. Or willing to lose dollar over time. Okay. Willing to lose uh, tips over time. Okay. So if you have this defined, okay, if you have this already defined, what will not happen to you is your account blowing. So we assume that you decide to lose 10% per time, right? 10% per day, per day. Okay. So per day, and your trade in terms of risk reward, trade in terms of risk reward is, okay, 1 is to minimum 3. Okay. If you have this, losing 10%, this is high, very high. By losing 10% uh, per day, okay, per day. And then what are you doing? You're taking your risk reward 1 is to 3. Okay. When you have this, what it means is that, okay, you will have to lose 10 trades to lose your account. Okay. You have to what? Lose 10 trades consecutively to look, lose your account. Once, okay, and once you win one trade. When you win one trade, what have you gotten? If you win one trade, if your risk reward, your loss is 10% in a day, and you have won one, it means that you have gained 30%. Do you, if you have defined it this way, 1 is to 3, 1%, okay, is to 3. So sorry, if this is your risk reward, 1% is to 3, and you are willing to lose 10% in a day. One trade you win. When you win one trade, you are gain an additional 10%, 3%, sorry, because this is 1% is to 3, okay, which translates to 10% is to 30. Do you understand? So once you define this, it is going to be difficult for you to lose unless you're, so that is where you can start blaming your strategy because you have this one defined. If a strategy, in a strategy, you take 10 trades, and out of the 10 trades, you are not able to win 2 trades, the strategy is not good. So in this particular situation, when you have 1 is to 3, okay, and you win 4, okay, out of 10 trades, win 4, win 4, lose how many? 6. What have you gained? With winning 4, you have made how many percent? Win 4, you have won what? 12%. Okay. And this is what is to 3, right? So 4 times 3, 12. And this you have lost what? 6%. Are you profitable or not? Any comment? Are you profitable with this?
Yes, profitable.
Yeah, okay. So it means that under this particular circumstance, because you have for every trade, you are 1 is to 3, you are losing 1% or gaining 3%, right? This one, you're not setting big target. I just setting win rate of 1 to 3. I say win rate, risk reward 1 is to 3. It means that you just need 40%. You just need 40%. Please hold on and give me 1 minute. I haven't sent it. Okay. So you see that in this particular situation, you have defined that. So if you don't define that, then your account, first thing I said, if you don't define this, okay, what you're about, what you want to lose in a day. So some people can say, I want to lose 1%. Some people can say, I want to lose 5%. Once this is defined, okay, once this is defined and this is, you meet this level, you close. So if you're losing 5% of your account in a day, how many trades do you have to take to lose your account? You need to take what? 20 trades. to lose 20 trades consecutively to lose your account. But why do we take just one trade and we lose the account? It is because we don't know how to trade. Please, do you understand me? Okay. So you have to approach this. It is not if you are approaching it by trying to flip account. Yes, it is. It is. You see, it is the thing that has collapsed some of us. Okay, that has delayed our progress because we have been influenced by people who are trying to flip, double the account, double the account, double the account. You want to double in a day, you want to double in 3 days, you want to double in one trade. Okay, so this has a negative influence on you. And anybody who is trying to do that, okay, will be trying to, it's not trading, but we can define it as we're trying to gamble. But yes, it will become a trading style when you have mastered being able to target small, being able to manage your trade. This is trade management, being able to manage them within a period of time, okay? Then you know that, okay. So for instance, now, if you know how to do all these things. Okay. What do you need? The only thing you need is to get a setup, okay, that has a small stop loss. A setup that has a small stop loss. For instance, I'm looking at this engulfing. Price is approaching that engulfing. It reaches there and create a with 30 minutes, what 15 minutes, something, there's a breakout and has given me a confirmation. Okay. Yes. I'm not going to book boom, 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 boom. No. This has reduced my stop loss, okay, to a small margin. Okay, I check the stop loss. It is 20 pips. Stop loss. My target is what? 127 pips. Okay, can you see? So this is 1 is to 6.5, almost 1 is to 7. So I go to my risk calculator, go to my risk calculator on my FS book. Okay, I select the pair, code XA USD, UUSD, sorry, UUSD. Select this. Now, what is your account balance? Your currency account balance is say 1,000 USD. What is your risk ratio? What percent do you want to lose? Okay. In this particular trade, you have defined that you want to lose 5% in a day on or per trade. You see, per trade per day, it is the time. Okay. So you per trade. So let's say 1% per trade. So I'm taking 1% on this. What is your stop loss? Right? What is your stop loss? Your stop loss is 20 pips. Okay, rates, what is it? Rate money, swap with money, pips. Okay, swap with rates. Okay, so you calculate $1,000 money, money US, risk ratio 1%. Okay, so you have 1% risk that you are taking, and then we calculate, right? All right. So you see, because you are losing 1%, okay, we are taking a trade with what 0.50 lot. 0.50 lot. So if I take a trade with 0.50 lot, how much will I be losing? It's 1% of it, which is what? Just $10. If I'm losing $10 of 1,000 per trade, how many trades will I take? Okay, to be able to blow the account, I'll take 100 trades. I'll take 100 trades. Out of 100 trades, do we think that I'm not going to get 40 trades that are correct? I will. You even go as far as getting 70% of your trade correct, getting 70 trade correct, or getting 80 trade correct, or getting even 90 trade correct. This strategy. So if you don't define all this, okay, calculate and enter the trade. When the trade goes around you now, your ego will start fighting with the market. So in this particular case, price reaches here, okay, reaches here, you've not defined your stop loss. You've not set stop loss. Then it starts going up. Oh, now instead of losing $10, you are at 20. You see 20 to be too much for you. Then it goes, then you're at 50, then you're at 100, and you are not able to close. By the time you realize you are around, let's say, 1,000 or 800 or $500, and you cannot close, and price will just go there. So you have to set a system to fight all those emotional triggers. Okay. Please, do you understand me as at this point? Many people have left. Do you understand? Okay. So, guys, it is the most important lesson in trading. The most important lesson is not strategy. The most important thing is how not to lose your money. And I said earlier that the thing that is within your control is how much you are ready to lose, how much you want to win. Okay, it's not beyond your control because when you take the trade, it is either win or lose. Lose, it can go, it can start going. If you don't define it, you can define how much you want to win. Okay, but what you are supposed to lose is what is most important to you. That is what will keep you in the game for a long time. The only thing that's going to keep you in the game for a long time is what? How much you want to lose. Lose 1%, lose 2%, lose 5%. If you know how to do this, then you can start trading any kind of firms that you want. Because your strategy is good, engulfing is good. And from all the back tests that you've done, okay, from all the things that you've done, you understand that this works. It's not story, it works. But when one fails, don't let one bad trade cause you to lose your account. Because in everything, if you say 90%, if you say a strategy has a 90%, we didn't say it has 100% win rate. We said what? 70%. So when people ask me, I tell them 70% win rate. Some people, I even tell them 60% win rate. That is what under promising, okay, and over delivering. So when you start working with it, then you realize that, oh, this one is the win rate is around 90%. Okay. But 90%, what about the 10%? What about the 10%? It means that if you're taking 10 trades, 9 will be correct, one will be bad. That one that is bad, don't let it blow your account. If one bad trade can blow your account, then you don't know how to trade. That is it. So you don't allow one bad trade. If you have, let's say, 10 trades and you're winning 4, if 6 blows your account, so you don't know how to trade. This bad trade are not supposed to blow your account because this 4 win has to cover this 6. This 4 wins have to cover this 6. If these 4 wins cannot cover this 6, okay, then you are not trading properly. So there's there's a difference between good strategy and a proper trader. So you are being trained to be what? Proper traders, trade the proper way, okay? Calculate your risks. Use my FS position calculator. I'll send you the link. Position calculator. You calculate your risk. You enter the trade. Now, sometimes, okay, there is something that you do that is early entry. Today, I did one. Okay, so let me explain to you. Today, when I woke up, I saw this setup. I think I was looking from here to here. So I have not closed the trade. All right. So see from here to here, think on 4 hour, check 4 hour. Okay, on my profile, okay, profile, 4 hour. So I saw a 30-minute, there's a 4 hour engulfing on the other profile. Okay, so I saw a 30-minute breakout, a retest, a breakout. So market was here. Market was here. Okay. Then I took an early entry with this. So, okay, in case that it goes down, but I know I was looking at this resistance. Oh, this support, sorry. I was looking at this level. Okay. In case market is not able to my proper entry, I'm looking at this level for a sell. But remember, when I'm doing this, I'm also looking at where price is coming from. I have no idea where price is coming from. There are no reference point here. So I'm just reading and going. So I sold here. Now, when I was selling here, I couldn't have entered one lot size because if I enter one lot size, my stop loss would be somewhere around here, right? This because this is where I expect price to come back. So I entered a small lot, okay, to see price if it so that if price doesn't come up here and reaches here, I can close my trade, okay, and wait for it to come. This is early entry. So when I'm doing this early entry, I'm looking at where my possible stop loss will be somewhere around here or here. So I enter a small lot. Okay. It is so one thing you have to I see that most of the people here following now are beginners. Okay, like that's the most important thing. See, I'm telling you from experience. I drew an account from our local currency, which is 5,000 cedis. As at that time, at that time would be like $500. Okay, to 32,000 Ghana cedis. So I'm talking about 5,000 cedis to 32,000 cedis. Okay, and lost this within a day. It took me about a month to grow this uh, amount here to this amount. It took me a day to lose all this money. I nearly jumped from a story building, right? And one bad trade, one bad trade has caused me to lose more. One bad trade, because that trade didn't define how much I was ready to lose. So then you cannot blame the strategy because the strategy I was using at that time had about 70% win rate. So if it has 70% win rate, why is it that this trade that I lost, okay, shouldn't have been just 1% of this amount or 10% of this amount, but the 100% of the amount? It means that I'm not a good trader. And I was not a good trader. So that is the advice I can give in terms of risk management. This business is not a get rich quick business. Okay, it is a process. It's a process. It's a system. It's a systematic thing. Okay, if it was like many people will be having money. So now we need to approach this market with an understanding, okay, a very good understanding that every time you are entering a trade, and the problem we are having in here is that in Africa, none of the of us, okay, so this amount was 5,000 cedis, was around $500, okay, $500. You want to make 3% in a day of $500. 3% of $500 is small. 1% of $500 is what? Uh, 1% of 500 is $5. You've left everything that you are doing and you are trading and you want to make $5 a day. That is the reason why you will start chasing the market with big lot size because you have $500. How if you're making 1% or 3%, 3% in a day is $15. $15 in a day is nothing to you in Africa. Okay. So most of African traders don't have the required capital to start trading. Okay. Because if you are taking a risk, if you have $500, your account balance is $500. Let's say 500 $500. Okay, and you're recalculating it to give it. You see, you are losing $5 using this. Okay, and but your profit target, You didn't even talk about. You didn't look at the profit target. But if you're losing this 1%, your profit target, if it's 3, you are getting $15. Okay, $15 is not enough. So that's the reason why most of us are taking that kind of risks. Okay, but remember, learn how to trade. You have to learn how to trade the proper way, whether demo or anything. Learn how to trade proper way. Therefore, then you can advance to start taking a profit challenge. Do you understand? So I end the session here. I'll leave the video. You watch the video, and I'm telling you that you guys that followed, okay, with all the lessons that you have learned, the strategy is the most important strategy, and I'm saying it from my heart. Okay, this is experience that I've learned for a long time. 5 years of trading. 5 years of trading. You can make money, and one day you lose all the money just because of one trade. You don't want that to happen to you. When it happens to you, you blame the strategy. There's no bad strategy, even moving average. And I can tell you that if I show you a moving average strategy here right now, I show you a moving average strategy right now. You see that even a moving average strategy that I'm talking about will make you 70% win rate. Okay. So a moving average strategy can even make you that amount of money. Okay. Now, I don't know. We have 3 minutes left. Let me show you something. Let me add a moving average. Moving average exponential. Add two. Okay. All right. So now I'll define the first one. Find the first one, moving average input. So length is 12, moving average. This EMA, length is 12. 12 moving average. Okay. Now change the color. Make it still leave it blue. Okay. And next one, I'm going to change it and make it 12 moving average. 12, then 12, okay, EMA, then 12, 48, sorry, 48, now 48, with the 3 minutes. Change this one to green, green, green. Okay. So now watch this and tell me if this doesn't work. Now looking at this chart, okay, looking at this chart, your trading style is that when a moving average cross, okay, cross to the downside, then you have a peak formation. You want to see a 1 hour candle come down here, come and touch the 48 moving average, the one above, and come and close below. Once it closes below, you take you look for a sell. Okay, so this one closed below. Price come back, you sell, right? Now, when the market is going up and it crosses here, you want to see price come to touch the 48 moving average, to the downside, and should close above. So you see, it touch came to close what? Above. So you are looking for a buy. Is it not going? Okay. Is it not going? Right? Here, you came to touch the 48 moving average down here again, right? You close above, you are buying. Is it not going? Right? And you can follow it and you see that it actually works. Okay, it actually works. So here we cross, we didn't touch the 48 moving average, we touched the 48 moving average, we close below here. So this is where it failed. So if this one fail out of all the many win is blowing your account, then you don't know how to trade. So it's not always not about the strategy. Okay, it is about how you trade. Okay, so I hope that this session is going to be helpful, right? And then we are ending. Okay, okay. Time is up, Scott. So I couldn't mark your assignment. Well, your assignment was one of the of the best. So don't worry. Okay. All right. So guys, we end here, and then I'll add you to the group. From there, we have ended the whole